We've still got the JSE trading in negative territory and on pretty light volumes at this stage. What are you making of trade as we're seeing it play out today?
Well, Alishia, I think the markets are a symptom of the time of the year that we're in. We saw some very hawkish comments out from Bernanke yesterday. So really the market perhaps looking for some direction. There's not much news out that is going to lead us either up or down. So very directionless at the moment.
Well, certainly resources at this stage looking pretty flat compared to the hefty falls we've seen in that space on the back of gold miners under pressure. How are you viewing the gold mining space specifically?
Well, Alishia, in terms of our South African gold miners, we can see, or we have seen that our local gold miners, when we look at the gold output numbers in the recent month, have come down purely because of on the stronger rand. They've done a lot of restructuring in terms of safety. And also a lot of they're really taking out some time to make sure that their mines are going forward, going to be stronger, if we do see a lot of upside on the gold in the next 6 to 12 months, that we could, potentially gain.
Are you confident in the progress we're seeing these gold miners make on the safety front? Because this is a cloud that continues to hang over the gold mining space. And as I was saying earlier, it's just this week, Goldfields that's now in the spotlight.
Alishia, we do have some of the most dangerous mines in the world. So looking at that in context, and we saw some of the stats numbers that came out last week, our South African mines are definitely improving, and not great numbers in terms of death, because life is always important, but definitely in terms of the numbers are getting better, and we are seeing mines closing down for periods of time to make sure that the processes are in place to prevent the numbers from increasing.
So confident in the progress that's being made on that front, albeit slow. Let's take a look at the dollar, because it's the dollar strength that's really put some pressure on the gold price over the last couple of days. What's your view on the dollar more specifically moving forward? Because the big question at the moment is for how long? Are you foreseeing more dollar weakness going forward?
I think Nedbank's quite bearish on the dollar. We will see something probably a little bit different over year end, because with the volumes low, volatility will increase. We could see perhaps a scenario, if we look back at 2001, where we had some dollar strength towards the end of the year. We've got a year-end dollar rand at 769. So possible for the next couple of weeks, we might see some dollar strength, but into the new year, we could see some more weakness.
In that context then, I mean, what's your outlook for this gold price moving forward? Some are saying that the longer-term bull trend for gold is intact into 2010, but tactically, as they head into the year end, they're going to be reducing their exposure to gold.
Correctly, Alishia, when we look at the technical graph, it looks like it could go all the way up to 1,300. But like I said, there is a strong possibility that the low volumes over Christmas are really going to dictate where it's going to go. And obviously results coming out in terms of employment, we'll see a little bit later in the week. If we do see a continuing trend in unemployment coming off, we could see some dollar strength coming from those numbers.
So there we've got it covered, price and volumes on the one hand. Let's take a look at costs, because just this morning we saw Exxaro out with a statement saying that Eskom is possibly looking to renegotiate long-term contracts. How much of a threat does this pose in terms of production costs for our big miners moving forward?
Well, in terms of, Alishia, looking at that, I think it's quite cautious in terms of Exxaro to look at that. And if Eskom is going to be renegotiating, then Exxaro can't commit themselves in terms of capital expenditure. So we'll have to see how that pans out. But definitely cautious. If we do see some cutbacks, definitely negative for us.
In the meantime, just looking at the gainer board today, Shoprite and Pick and Pay sitting at the top there as our two gainers. Shoprite gaining close on 2%, with Pick and Pay up 0.9% so far. Let's go through some of the motivation for that drive higher today in a context where we've got the overall market sitting in negative territory.
I think, Alishia, when one looks at the market, there's a lot of nervousness, not very much direction. You see investors really falling back on defensive stocks. And Shoprite and Pick and Pay in that sector, obviously Shoprite more defensive than Pick and Pay, investors are looking for something a little bit more supportive, something, where the Christmas season, where shoppers are hopefully going to be shopping for Christmas, that really those kind of stocks are going to, we're going to have some good earnings from there. So investors looking for some defensiveness.
Same story for SABMiller then, that's ranking third at this stage of the game with a 0.8% gain so far. We've known that SABMiller came out with an announcement this morning saying that 8.45% of shares are going to be put under black ownership, and that's increased the value of its BEE transaction from an initial estimate of 6 billion to 7.3 billion.
I think that's very positive for SA Breweries, also one of our nice defensive stocks. I think what's really positive for them is that it helps them with their BEE criteria, and then also going forward, Alishia, they're really restructuring it, and they're making sure that their employees get about 40% of the actual benefit. So definitely good for them. We did see a bit of a shock in the market reaction, but we see SA Breweries really stabilized and moving forward.